What's going on, guys? In this video, I want to give you guys a perfect situation where there's two scenarios that could have happened, right? So what we're going to be covering strategy-wise is the 20 play. A lot of you guys on YouTube know this strategy already. There's two scenarios here where one, you take a small stop loss. Two, you remain in the trade and you actually go from red to green. This is a big thing for a lot of traders that seems to happen, because a lot of times what happens with traders is, naturally we're trading too big of size that we're emotionally able to handle. So when we get into a move, let's say we get wicked into a move and the trade starts to move against you, you tend to feel those emotions, and A, you cut your stop loss. B, you have a hard stop loss that gets wicked in, and meaning you're taken out of the position, or we just completely panic and then we just, panic sell, right? So there's definitely a situation and how do I say it? There's definitely a reason to have a tighter stop. And a lot of times the reason to have that tighter stop is when you're playing bigger size. So especially if you're scalping, right? Let's say, for example, you're playing 2 or 3 mini contracts. Hell, even you're playing 1 mini contract. A lot of times we don't want to sit in a move where we're going to be in drawdown 15, 20, 25 points, right? It just wouldn't make sense risk to reward ratio wise, especially if you're just taking a couple points to the positive side. If we look at this last 20 play that's set up here at 125 Eastern, perfect example where it closes below the 20. It actually breaks this little uptrend that we've had all day today. And I'll put a little line here, that way we can see it. So once we close below that 20 period moving average, this is going to give us an indicator. It's going to give us a reason why we're looking to take this trade short. Okay. So that low, that pivot where we're looking to go short, is a confirmation of 22,288. Okay. Now, if we go to a 1 minute time frame, situation number one is going to be, we are playing a little bit bigger size. Okay. So we're playing a little bit bigger size, and we're looking to get in. Let me make sure I have this set up right. We're looking to get in when price confirms 288. Okay, so we'll go down into the 1 minute time frame, and we're gonna see here, where's my 288? 288 is here, so right in here. Okay, so we are looking to get in when price breaks. Okay, now in this situation, we break price here. Okay, so let me blow this up so we can see this a little bit better. Okay, right here is where we're going to get wicked in. So here's the move on a 1 minute time frame, where your 20 play entry is when we confirm this bottom wick. So it's this candle that's going to wick you in. Okay, and then we have a little bit of a bounce. Now this bounce is a lot to stomach, right? It's a lot to stomach, because what if this candle was just a reversal candle signifying that we're going to continue the move all the way up to the upside? Well, there's no way we want to be sitting short through all of that emotional pain. So situation one is where maybe we're playing 1 or 2 mini contracts. But necessarily we don't want to use the previous swing high as a stop, because that's going to be, 20 points to the upside, 25 points to the upside. So we can use, even though we're getting into the move here on the confirmation, which is legitimate entry, we can use a previous 1 minute candle as a stop. Okay. In that type of situation, you can essentially try to take this trade with 8 points worth of risk, because the previous 1 minute candle, the whole entire range is 8 points. So essentially you're going to get stopped out here literally about a minute and a half later for 8 points worth of loss. Manageable, 100%. You can then move a next pivot here, saying that if we confirm this breakdown, we can get back into this trade, which this would have been a nice trade. Or you can just say, I'll wait for a better time, a better place, a better day. Now here's the next scenario. Let's say we are playing micro contracts. Well, by playing micro contracts, we actually can allow the move to work out a little bit more. Okay, because there's less risk involved. Okay, so if we blow this up if our entry is here at 130, immediately after getting wicked into the position, it starts to bounce. And when this starts to bounce, we can use the reason why candle high as our stop. So essentially on this play, we're giving ourselves around 18 points of risk. Let's call it 20 points. So if we're playing one micro contract, essentially we're risking around $40 a contract. So do the math. If you're playing 2, it's 80. If you're playing 3, it's 120. So for the sake of this video and for the sake of example, let's use an example where we're going to trade 3 micro contracts and we're giving ourselves a 20-point risk. The most we're going to lose is $120. So yeah, although this is going to be putting us in drawdown very quickly, you're going to see that this move actually backtest the 20, spikes above it, fails to close, spikes above it, fails to close, stays under your reason why, the high, and then continues the move to the downside into your next target, right? So in one scenario where someone who's trying to aggressively scalp is going to get stopped out on that bounce, there's another trader who's allowing it to work a little bit more and going to actually be profitable. Now, if you get in through those 88s, we're currently trading down towards, let's see, the lowest we traded down towards was 73. So again, it's not like a full 1-to-1. 73 to 83 is 10 points, to 88 is around 15 points. Again, because the market's been extremely choppy, maybe we're just looking to, after that drawdown period, and once we start going into the green and we can pick up 5-10 points, maybe we just cut the position altogether. Or you can continue to hold, but at least move your stop loss into break even at this point. So if you do get stopped out, it's essentially a risk-free trade. And if it does continue to get down into our next price target of 68, you're going to make your 1-to-1, which is close to 18-20 points. Okay, so those are 2 different scenarios. Now, what's the right way to play it, right? The truth of the matter is there's no right or wrong way to play this. So for every scalper who's putting on big aggressive size that can trade 2-3 contracts and get those quick 3, 4, 5-point moves where they're making $150, $250, $350 on these very quick moves, there's going to be situations where you get stopped out for a couple $100. But you're going to make those winning trades a lot more than you're going to make those losing trades, especially when the market is cooperating. We got some decent price action. And if you're wanting to play it a little bit more safe and you're wanting to kind of let these trades work out and you want to manage risk a little bit more, maybe you need to be in the basket of, okay, I've identified I can't trade 2-3 mini contracts. Not on my drawdown, not on this account size. I've got to be working 3 to 5 minis. I've got to be risking $100 to $200 a trade. I've got to be looking for $50, $40 to $100 a winning trade. And I got to kind of go slow, right? So find the basket where you fit in, because this is not a one size fits all. And definitely the trader who was using like a previous 1-minute candle as a stop and stopping themselves out was a fantastic stop out. Okay, because they limited the potential downside. They limited their risk to around 8 points on the NASDAQ, which is very, very good in my opinion. And the trade idea just didn't work out. There's going to be other opportunities to get back in. For example, you could have allowed it to bounce, get rejected at the 20, and then you could have taken a re-entry. And you could have taken that for your 2, 3, 4 points and not only broke even, but maybe actually came out green on the entire trade by double backing into the same move once you've seen that confirmation that we were going to stay under that 20-period moving average. Okay, so again, good on the trader who stopped themselves out because you limit any potential real damage, and good on the trader who's going to size down and allow that reason why to be the entirety of their stop and try to get close to that 1-to-1 price target. Again, not all the time you're going to get 1-to-1. Sometimes you'll get 2, 3 Rs. But sometimes it'll come very close to almost paying you that 1-to-1. And that's where you're going to need to be a trader, and you're going to need to tell yourselves, do I really need the extra 2 points, or can I take profits here and finish green? Okay. Don't be so hard-headed to where if you're trader number 1 who's trading bigger size, is not going to take the loss on the trade because you're stubborn. And B, don't be the trader who is trading a little bit more size and trying to hold and hope and hold and hope and try to get all of these big extravagant price targets. Take the money when you got it, especially if you were in drawdown and now it's back to flat and green. We just need to work ourselves out of that trade for a little bit of profit and then wait for the next overall setup. I hope that video makes sense. I hope that's a clear little breakdown of 2 ways that you can play that. Again, both ways were correct. Both ways were managed properly. But I just wanted to make that and bring that to everyone's attention. If you guys want to trade with me each and every single day live inside of Evolution Traders, you guys can definitely join by using the link down below in the description. Also, make sure to like, comment, and subscribe on this video, and I'll catch you guys all in the next YouTube video.